My name is Peter Gertje. I'm a director of the Nordic Cochrane Center in Copenhagen, professor of research design and analysis at the University of Copenhagen. 2 years ago, I found out that our prescription drugs are the third leading cause of death.
Hey all, welcome to ShareTreck. This is Raj here, and I hope you are able to hear me clearly. Let me just quickly check all the settings to make sure that I'm transmitting. Okay, everything looks good here. So I'm going to get started off first with our CNBC homepage. As you can see, the futures are all looking red, and they're deep red, not the mild ones that we used to see. Last week when we ended up the live stream, I was of the opinion that there could probably be a dead cat bounce. Situation seems to have changed much. And if you had looked at my weekend videos that I put out, I was looking at the dollar index and seeing the DXY drop significantly. I made some conclusions which I can probably revise later on at the end of next week as more information becomes available. But today seems to be a red day. And one of the news items that caught my attention was this one, which says treasury yields fall as investors weigh on the economy, state of the economy. So basically what the investors are thinking that is that they have concerns because Trump commented that his tariffs may affect US growth and didn't rule out the possibility of a recession. So if there is going to be a recession, then the interest rates will drop. And if the interest rates drop, the bond face value will go up. And that's where you make a profit and you lock in a higher yield before the yields start going down. And that's the reason why money is moving into the bond market and it's being sucked out of the stock market. The other factor which also probably is at play is that foreigners who have invested in the US market with the strong dollar are likely to get a lot more domestic currency when they take the money out of dollar into their own currencies. And this is a small window of opportunity for them to take the money out if they believe that the US economy is going to go bad and the US dollar is going to go weak. So that I think is what is playing out right now. But having said that, I would like to point out that we have to look at the Japanese data which is coming out. They have got the growth and price index data coming out today. And what numbers come out there will determine how their central bank will react with their interest rate, which in turn is going to play on the USD JPY combination. And that could take us either further away from yen unwind trades or closer to yen unwind trades. So we have to keep an eye on that. And for this week, I think the JOLTS data is going to be very critical. And then, of course, on Wednesday, we have inflation rate data coming up. That also is very important. And those are the things that could definitely move things around for the market. And there are even more important data points coming up, but let's not get too ahead of ourselves. Let us do one step at a time because things are confusing as it is. Now, I want to have a quick look at the heat map. As you can see here, I would like to go into the year-to-date performance, and you will see that utilities are doing quite well here. And healthcare is doing quite well here. These are two sectors along with telecom services which have remained relatively healthy this year so far. If we go to a 1 month performance, you will see that utilities, telecom and healthcare are still looking pretty decent, even though consumer defensive has had some dents on it to Walmart and Costco. Of course, the multiples were pretty high there. And the biggest hit is out here for Tesla, and then we see Nvidia, Broadcom, the semiconductor guys taking a lot of hit thanks to the DeepSeek and other things. Now, if we go to the 1 day performance, you'll see that utilities is still pretty good, healthcare is still pretty good, and telecom services is pretty good. So those are the areas where value preservation is happening, and potentially if there's a recession or something that comes up like that, you got to be in consumer staples, utilities, and healthcare. These are at the bottom of the Maslow's hierarchy. Well-being, these are the things that are indispensable and will continue to generate returns. So I think part of the market might be rotating out of growth stocks, which are likely to be the technology area, and then get into defensives like utilities, healthcare, and telecom, those kind of areas. So that's what I am thinking is likely to happen in the background. Now let's go on to look at our TradingView chart. And here I'm going to bring out the NASDAQ futures first. And if I look at NASDAQ futures, I can see that we are down 1.29%. We are already below this line of support, which held us yesterday. If you see this long-legged sword out here, we fell down and then we jumped back up again yesterday, thanks to the support at 20,038.50. We have broken down below that already, and this huge area of support we have starting at 19,747.50 is our next hope to arrest any further fall. And I think we are going to have a dead cat bounce as we approach this huge area of support, and we'll evaluate it at that time, maybe tomorrow or day after. Then we have S&P 500 futures, which has also fallen below the support of 5,738, which had helped us yesterday, and also below the 200-day exponential moving average, which had helped us yesterday. We are already down. And if you see this candle out here, this is the candle for today. And I'm going to convert this support at 5,738 into a resistance. I'll mark this red, and now we are heading for this gap fill out here. I'm going to draw two lines out here for the gap fill. One is the upper end of the gap fill, and that was pierced yesterday, and then the other is going to be the lower end for the gap fill. So these are the 2 points where we potentially could bounce back up again. I'm going to mark them as supports, and I'm going to see if we are able to jump up from here. Now that said, let us look at the dollar index. Yesterday I made a video about the dollar index. If you didn't have a time to see that, maybe you could check it out and give me your thoughts on it. Dollar index is very close to a dead cat bounce in my opinion, but the fall is very steep. It fell from 107.044 to 103.670. This is a very heavy fall, and this is what makes me think that probably the rest of the world is taking its money out of US assets. That could be another thing happening. And if you keep in mind the dollar's weakness and then look at Bitcoin falling, that kind of creates a scenario where you can imagine that the Bitcoin is getting weaker. But this morning I can see that the Bitcoin prices are coming up, Ethereum prices are coming up, they are recovering. That could be an adjustment for the falling value of the dollar. But in my opinion, Bitcoin is very strongly linked to the S&P 500 based on the past correlations. So if S&P 500 goes down, I anticipate Bitcoin also to go down. So that's my prediction. Of course, not financial advice, so please do your own due diligence. We are looking at the 10-year yields. The 10-year yields are starting to come down, and they are coming down because as I saw in that earlier article from CNBC, investors are looking at the state of the US economy, and they are thinking that we are heading towards recession. There will be interest rate cuts, and therefore it's going down. But on the other hand, Powell definitely has got problems with the employment situation and inflation, because if tariffs come into play, inflations are assured. And increasing interest rate will bring down inflation, but it can push down employment. At the same time, reducing interest rates while tariff-fueled inflation comes in could create further inflation. So it's going to be very difficult for Jerome Powell, and we should probably anticipate a public spat between Jerome Powell and Trump. Trump wanting to reduce the interest rates and Jerome Powell wanting to hold it. So I don't know how it's going to turn up, but let us look at USD, Japanese yen continuing to fall. So that's heading towards our potential rate at which we could see yen unwind trades happening. That's, I have placed it around 125 to 130 rates. So 130 is the earliest that we should start worrying about it. Not right now, we are still far away from it. And if Japanese economy turns out to be weaker, then I don't think we'll have to worry about the yen unwind trade anymore. Now let's look at the indicators. S&P 500 is poised to drop below this line of support, and as we saw in the futures, we are already below that. Nasdaq is also down below the next level of support, as we saw in the futures. If you look at VIX, VIX has jumped up. It's gone up 10.91%. This assures us that the market is going to go down. The volatility is pretty high, and we have plenty of room on the RSI, in my opinion, before we turn around. And then if you look at put call ratio, you will find that put call ratio is almost neutral. There is nothing much to be had out there. Look at QQQ, you can see it's already down 1.40% in pre-market trades, not sounding that good. And I would like to look at gold, which is moving sideways and consolidating just above the 100-day exponential moving average, and it's staying steady out there, moving sideways. I expect that at the most it may bounce off this minor line of support, or it may bounce off 2792, but I think ultimately it is headed towards $3,000, breaking the resistance on the top. That's my expectation, given the weakness for dollar. And next, let us go on and have a look at AI. I want to talk to you about, before I go into the charts, I want to talk to you about a spreadsheet that I have created, in which I have a bunch of shares which I think are looking really good for dollar cost averaging at this point of time. Let me take you to that sheet. I hope you are able to see this spreadsheet. I'm going to go into the spreadsheet and increase the size of this so that we can see it better. Okay, so this is big enough. So on the top, you are seeing the main indicators, which we have already checked out. The last change was 4.02% for VIX. It has gone up even further right now. Now, next, let us go into this area of the chart just for a quick look at what the PE is. And this is where the stock market was on Friday. And Supermicro had the lowest PE, it was 16.73, followed by Alphabet. So I think if one was to start dollar cost averaging, Google should be the first stock to look at, because it's at a very severe discount. And I think for it to get much cheaper is going to be difficult. So if one were to dollar cost average, I would reason that at the most the PE could go up to 19, not below that. Therefore, the possibility of losing much money is not there, and dollar cost averaging would be ideal for Alphabet at this point of time. The next best one for dollar cost averaging is Meta Platforms. It's at 25.90. And then onwards, everything else is organized out here. The most expensive is Palantir. I would say I wouldn't dip into Palantir or Tesla. Tesla is definitely going down. It's very rich in valuation. AMD is also very rich in valuation. It has got plenty of room to go down before improving, because if you look at Nvidia is at 38.34 and AMD is at 99.99. So it's got to go down. Broadcom, again, I wouldn't touch it at this point of time because valuation is very high. And then we have Netflix. So if I was to look at this overall chart and say, if I want to pick up some stocks that are good for dollar cost averaging, I would take the first, second, and third stock out here. These three are really good. I would wait for Microsoft to drop a little more, and Apple also to drop a little more. So I wouldn't get into those stocks as of today, but tomorrow again, I would take a chance on those stocks, assuming that we are going to continue to have a little bit of a downtrend going forward. The other stock I would look at is, of course, CRISPR Therapeutics, and I will talk about it when we do the genomics. And I would also take a little bit of Illumina. So those are the two other stocks that I might probably look at dollar cost averaging overall when I look at the PEs out here for profitable companies, and the price to book for the companies like CRISPR Therapeutics and Illumina. Now let me go back into the price chart. Let me just change the view here and go back into the trading view platform. And here we are. So let's start off this analysis. And I think Inf is already out here. Hi, Inf. Good morning. Thanks for joining. Let's look at NVIDIA first. NVIDIA is coming very close to this huge area of support from where it can bounce up. Again, it's very close, so I'd be very carefully watching this area. If it falls into this and comes below, I would definitely start dollar cost averaging, because that would mean that NVIDIA is in serious trouble. I very much doubt that it's going to fall below this, but we'll have to wait and see what happens. Next, look at AMD. As I mentioned, the PE for AMD is very rich, so it still has got to come down. I would probably pick up AMD shorts and ride the way down along with it. Intel Corporation, I didn't put Intel out there. It's not profitable right now, so I don't have good metrics for that. Hi, Hot Dog. Good morning. Hot Dog, did you get to see the PE chart? Let me just quickly show you the PE chart. So before you came in, I was just talking about this particular chart, and I said that I've organized a bunch of companies based on PE, and the best for us to start dollar cost averaging, in my opinion, is Alphabet. And if you are a bit of a risk taker, you could even consider Supermicro, because the PE is quite low. Alphabet is absolutely dirt cheap right now, and dollar cost averaging can begin out there, in my opinion. Meta Platforms is also looking attractive, but for Microsoft and Apple, I would wait a little more. And I was doing a comparison between NVIDIA PE and AMD PE. AMD is super rich, and it has got to go down further for it to be a worthy buy. Palantir and Tesla are totally out of bounds because they are too richly valued out here. And I was thinking that we'll have to focus on some of these companies. And in CRISPR Therapeutics and Illumina, I find two picks in genomics. Those are the two stocks I thought I would do dollar cost averaging. So this is what you probably missed in case you joined me just now. Let's go back into our TradingView platform and continue from there. And let's see. So we are now looking at Intel, which is again dropping. It's dropped 1.65%. The overall market trend today is going to be negative. SMCI is dropping further, so the PE is going to be more attractive than what we saw out there. And Meta has dropped again 1.70. Again, the PE is going to look attractive. Microsoft is down 1.45%, continuing to drop out here. Apple is down 1.47%, continuing to ride this diagonal line of support all the way back down here. I think that Apple will find a whole lot of support at 232.63, and therefore I would watch a little bit before trying to DCA into Apple. Then we have Amazon, which is down 1.80%. I did not have Amazon out there in that chart. I will add it, but I think Amazon is a worthwhile dollar cost averaging target right now. And we look at Tesla. Tesla is going to continue riding down. If you want to short it, you have TSLS, which is a safe short. It is 1x. Then you have TSLQ, which is slightly risky because it is, I think, 2 or 3x short. TSLS is cheaper. TSLQ is a little bit more expensive. But those are the options that we have. And we are still within this green zone of tremendous support. And we have this gap fill that still needs to happen. So I am thinking that Tesla is riding towards the gap fill right now. And then we look at Google, which is down 2.11%. It has fallen below two huge levels of support out here. I am going to convert them into resistance for our ride way back up, which is inevitable. And I'm going to mark that here as well as red. And let's proceed further. So our next support for Google is going to be 169.10, and with a drop of 2.20, I think it's a screaming buy right now for dollar cost averaging. So I would definitely dollar cost average on Google today. Qualcomm is down 1.25% in pre-market trades. Oracle is down 1.91% in pre-market trades. Oracle is moving for this gap fill that is happening out here. Let me just put an arrow so that we can see the gap fill happening out here. So I'm going to mark the bottom of this gap fill out here, so that you can see that we can come down all the way up to 142.73 before getting the support to move back up again. And then we have Broadcom, which is also getting weaker. It's at 2.73. And then we have Palantir, which is down 4.12%. Most welcome, Joe. Hot dog, most welcome. Thank you. Then we have Palantir, which is continuing to go down. It's down another 4.15%. If there's a short stock for short ETF for Palantir, that would be a very interesting place to be in at this point of time, in my opinion. But whenever you buy any short ETF, you have to be ready to get out very quickly, because these are tactical instruments, not long-term holdings. So that's what you have to remember. And let's go on and have a look at other stocks out here. FNGB is the new avatar of FNGU. And it is down 5.63% in pre-market trades, and FNGD is up 5.71. So I'm thinking that maybe soon I'll start seeing profits on my FNGD, in which I got snagged 3 months ago. They are all coming towards profitability, and I'm happy about that at this point of time. Then what else do I have here that I need to look at? I'm going to look at JD, because I bought JD and it's bleeding red right now, but I'm hopeful that it's going to come back up again. I'm just going to draw a line of support out here, trend line, and this is going to be running from here to here, and I'm going to mark this green. I'm anticipating a bounce back from here. So let's see what happens with JD. And what else do I have here? Rigetti. Rigetti is down 3.21%. It's still struggling to go above 9.86, which is a very strong resistance. SMR is down 5.31%. So this says this sell-off, I am so very surprised in the acceleration what happened over this weekend. So you should check out my DXY video, which I released yesterday. In that I talk about my theory of what is driving all this thing. And I'm thinking that US soft power is kind of weakening, and people are probably looking at getting out of the US dollar. The whole world poured money into US dollar, and US dollar started getting stronger and stronger, and it made more incentive for weaker currencies to get into US dollar. And now, with the prospect of US economy going to suffer because of tariffs and the isolationism and other things, and the decline in US soft power, it seems that rest of the market participants are thinking this is the right time to take money out of US dollar while it's still strong, and we can get more of our domestic currency, and then we'll see what happens later on. So they are probably taking the money out. That's what explains DXY falling down. So that's a very short answer to that question, but check out that video. I have spoken about it in detail. Let's go on into genomics right now. In genomics, Verve Therapeutics has done very well. Yesterday also it gathered steam as against what I was thinking. And this morning it's down 0.60%. Ginkgo Bioworks is also down. Essentially all are down, but if you look at CRISPR Therapeutics, it had gained a lot yesterday, and today again it's down 1.60%. And then we have Grail, which is down 3.98%. It's already fallen below this horizontal line of support of 31.95. So I'm going to mark that red. So our next support is going to be out here. I'm going to draw one more support line for you guys, and that's going to be out here. So this is our next support, and it's sitting at 25.97. And then we should come and look at Beam Therapeutics. Where is Beam? Because that's where we have some good things happening. I think the single dose of Beam 302 led to durable dose-dependent increases in both total and functional alpha-1 antitrypsin. This is for ATTR. This is a very positive news, but as you can see, the market is in a tizzy, and therefore all those positives have been sacrificed, and we're already down 4.32%. We have given up all the gains that we had. So the market is overall weak, and the only two picks I have out here for DCA are CRISPR Therapeutics and Illumina. Illumina is a successful company. It's pretty good. It's a China factor on top of it, and I think that if things get really bad, Trump will have to either do something to take over the government before midterms or come to a compromise with China and the rest of the world, and that could definitely lift Illumina. So that's what I am thinking. So this is a good time to do dollar cost averaging. I don't see prospects of it falling further below this. I'm just going to put one more line of support out here, which will be at 80.60, and that's where I would leave it. And you can also see the MACD starting to turn around. We have been oversold for quite a while, so a dead cat bounce is on the way. So it could probably consolidate between these two levels if the tariff issue is not sorted and if the China issue is not sorted. It's already out here. So that's what I am thinking. I think we had a momentary disconnection in between. I don't know if you guys are able to see me. Please put on the chat window if you are able to hear me. I'm going to assume that I was disconnected for a brief period. That's what OBS told me. I don't know why that happened, but it happened. What I'm saying is that Illumina has already been priced in for the Chinese blacklisting. It's already in the price out here. I'm thinking that we have a support at 80.60 and we might get pushed down from 89.33. So we are likely to be range bound out here. And then from here, if the China issue is resolved, assuming that Trump backs down finally with a lot of economic damage, then China will also lift off the blacklist and Illumina can really jump back all the way up to 141.43. I'm expecting that to happen, and then it will start coming down again and then go up again. So that's the trajectory I'm looking at for Illumina. That's why I'm thinking a dollar cost averaging would be in order. Again, the share at 86.62 is expensive from the size of my portfolio, not in terms of value, but in the size of my portfolio. So I wouldn't be buying Illumina as such, but CRISPR definitely I would be looking at. So this is what I have with regard to AI and genomics. Now I want to get into currencies and look at Bitcoin out here. Bitcoin is moving up, in my opinion, because the dollar has become cheaper. And if you look at the dollar index, you can see that the dollar index has fallen significantly. And this is where you have the dollar index, and you'll see that's a huge drop. And the drop is almost 3.67% in a matter of around 12 days. And this is quite significant. And the dollar having gone down, when you price Bitcoin in dollars, Bitcoin will look a little bit expensive. I think it's just trying to recalibrate itself. And I'm still of the opinion that Bitcoin is correlated with S&P 500. So if S&P 500 falls, so will Bitcoin, but it will fall after it has adjusted itself to the new value of the US dollar. So I'm thinking that later on during the day, you will see Bitcoin falling down again and Ethereum falling in sympathy along with Solana. So that's what I'm thinking is likely to happen for Bitcoin. So readjusting is taking place out here. I still have the target out here at 78,660 for this double top that we are seeing out here. Now, having said that, I would like to look at what's happening in the comment section. Hello hot dog and hello inf. Let's have some discussions out here. Is there any ticker that you want me to look at, or you have any thoughts that you would like to share with me which can help me during the day? Please share that with me. Let me quickly check if there is any new. So you're saying you're surprised with the acceleration of the downturn. I'm not that surprised. I have been anticipating this. I've been bearish for quite a while. I mean, the thing is, there is a huge privilege for United States as a reserve currency. And I think all the talk about tariffs and the reciprocal tariffs, especially against every country in the world, like if they charge you 2%, you're going to charge them 2%. All of that talk has been a big damper for rest of the world. And also Europe is now firmly believing that Trump has departed from the Western alliance, and now defense stock in the Europe are picking up, and European economies are going to put more towards defense, and that's going to boost their economy, because there will be a lot of funding that's coming into the European economy from various governments for the defense. And therefore I think the US is slowly losing the spotlight, and the spotlight is dimming on the US, and that's reflected in this sharp fall out here. What we need is for the White House to come up with constructive statements where it's realigning itself with the Western alignment, or where it was before all this Trump admin activity started, and then we can see the market sharply bounce back up. I don't see that happening, because Trump and the people surrounding Trump have a very different ideology, which is what they are executing. And also remember that the cuts done by Doge on the Fed, and as a result of which the private sector cuts, all of those are not yet priced in into the market, because they have not reflected in the employment. And Hot Dog is saying nothing really, just waiting to see if this swings or not this week. I think that if Trump blinks, it will swing this week. If Trump doesn't blink, and if he's oblivious, and if he doubles down, it's going to go further. Says to me, I think that shows market wants to rally, wants to go green, and are looking for any excuse. Of course, people will look for excuse, but you should also remember people are going to be afraid that the market may turn and it may go down again, because Trump may come up with some other statement, because he has in the past said, I'm going to postpone the tariffs. And then he has given a carve out, and then he has said, I'm going to put 250% tariffs. So I don't agree with you on that, from my perspective. Yeah, on Wednesday when we get CPI, we'll confirm the trend, whether it's going to be downturn, or it's going to be a jump up. So let's hope for the best. I'm going to start my dollar cost averaging today on Google. And I unfortunately bought SMCI earlier, so I could buy a little more to bring down my average cost substantially. So that's about all I have for today, my friends. Thanks for joining me. Please look at my video for the that I dropped on the weekend about DXY, and give me your feedback. Thanks, and have a great day. Bye for now.